All right, good morning, good morning, good morning. Comment allez-vous? How are you? Another fantastic day to be a currency trader. Another fantastic day to be with you. Thank you for coming to the Forex.Today YouTube channel. Today is Thursday, October 18th, 2018. That's it. Not a lot going on today. Well, GDP is pretty high. That's going to be out in Asia. Oh, a new version of Java is available. Thank you. So what else going on? Pretty quiet. Big misses on Great British Pound retail sales, some other blah, blah, blah speeches. So nothing's going to get in our way. Today is our day. So I suggest what we do is we cover the dollar pairs, the yen pairs, gold, and oil. Anything else? Oh yeah, don't forget to subscribe. Let's go. So hang on, I'm just loading the chat here. It's taken forever. Yeah, it was a little tardy today. Microsoft wanted some sort of, I don't know, I guess it just really wanted me to reboot. I don't know what was going on. So everything's a bit slow today. There must be a download or something it's doing in the background. There we go. So like I said, another great day to be a currency trader. Nothing going to be in our way. What needs to happen is likely to happen. So let's make that happen. Let me remind you that trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. I appreciate you and everyone else, the support staff, the senior executives. Everybody appreciates you at Traders Way. Please visit TradersWay.com. Open up a demo account. Now, why would you do that? Well, because we want you to succeed. We see these webinars as an investment into you up front. Try to give you some skills, some education. Notice that I don't overhype you. I don't try to make you trade. I don't try to get you into trades. You know, trade, go, you know, this kind of stuff. No, actually, we want you to succeed on the long run, right? Because that's the best type of client that trades every day for weeks and months and years and decades, slowly growing their account size, therefore slowly growing their lot size. That's a successful business, and we want you to be successful because then we're successful too. It's a symbiotic relationship. So anyways, my name is Wayne McDonald. I've been doing this for, I've been trading, currency, 15 years or something. So I will share everything I know technically and fundamentally and everything that needs to go up here. And whatever you need, be sure to just ask, okay? In the chat, ask. If you're not in the live, if you're watching a recording of this, then in the comments section, please leave your question there, and I'll try to answer it. I really do read the comments. If you click the subscribe button here, what happens is when you click the little bell, when you click subscribe, when I start the webinar, you're notified, and if you want to attend, you just click a button and it brings you right in. So that makes your life really easy. And then lastly, if you're new to these webinars and you like the charts, and you're like, man, I need those pivot points. Man, I need those templates. Man, I need those profiles. In the description, there's a link so that you can download those files. Pretty simple. Oh man, now what? Oh, can't. So anyways, that's all there for you. Comment allez-vous? So without further ado, we can dive into the charts. So hopefully everybody's good with gold and oil and yens and dollar pairs. Let's start with oil because we had two trade plans here, down and down. And oh my gosh, it went down! Yeah! Got a fist pump for that. Plan A down, plan B down, and it fell down. Whoa! Yeah, that's how we like it, bro. Notice it's exactly the weekly swing as well. Down she goes. Cool. Which is amazing because we're the ones that lifted it up and then we brought it all the way back down. Cool. So look at this. It's simply a swing trade here, right? Simply a swing trade here, like a weekly swing trade. Simple, very basic weekly swing trade. Look at the previous week. Almost did the same sort of thing. It had the Monday swing down, and then it kind of waited to Wednesday and then broke down. This one had the Monday swing down and waited for Wednesday to break down. But nonetheless, pretty basic swing down, basic swing down. Now, if you happen to be a bull, yeah, you got a reasonable buy here. You only made, I don't know, you made money, but then it collapsed on you. And then you did it here. Yeah, you made money, and then it collapsed on you. But the thing is, even if you were a bull, I don't think you lost money on this. You know what I mean? So, very cool. So now what? Well, we have a target in here, and we're kind of there now, huh? So that means our risk is increased. That's all. Our risk is increased a little bit. So how far down do you want to take this sucker? This price that we're at now is the projected low. It could get a little lower because of the weekly, but based on the monthly, we're at our projected low now. Isn't that nice? See, there it is. This is the weekly, like if you're really aggressively down here. But the top, now it's not a good top, so you could argue that it's not a real top. But this top being here suggests down here, could you stretch out and catch the weekly M1? Yeah, you could do that. Could you wait and go for the R2 or the S2? Yeah, if you're doing that, you're playing the bottom, I suppose. And you're either a real tough guy or a moron. I don't know. Don't know. This is the projected target. This projects that, and then you can do whatever you want on top as far as finesse is concerned, right? Maybe take half your lot size and let the rest maybe run. I don't like doing that. So do what you got to do, bro. But now we've hit our projected bottom. It definitely can fall further, right? And Jeanette says, can you look at WTI today? That was WTI. WTI crude. No. Steven says, could you? How about should you? Would it be a good idea if you wanted to? No. Off of the S1, no, I would not. Okay. Now, how about let me answer that different, Steven. Okay. If you were down here, which is, I can't see that. Is that 64? I don't know. If you were down here and it wasn't the 18th, but it was the 8th. then yes. And I'll give you an example of that. It's this. Okay, let me draw this. This is essentially a touch of the top. I know it's not really, but it's pretty close. Okay, so we hit our bullish projected target on the 4th of the month. This is where you have permission to counter trend trade. Okay, so now if we find ourselves down here and it's not the 28th, but how about the 22nd? Not recommended, no. Okay. Way WTI, I take profit at 68 value, but I see 68 and was. Well, typically you have to cover spreads and stuff. I don't know about your WTI. So just looks like you didn't cover your spread. Okay. So like, for example, let me go on a 1 minute chart. Let's see if I can make this easier. You see the spread here? The two lines, the red line and the blue line? Okay. So when you're short, this red line has to hit your exit. Okay. And so most likely you didn't cover your spread. Okay. Because it's not right. So if you're long, you need the ask, and then if you're short, you need the bid, and whatever. I always get those mixed up, but whatever. The red line on the way down. Okay, so you just didn't cover your spread. And that's not indicative of futures, because a true futures contract wouldn't have that. But that's trading as a currency, so that's in there. But any currency pair, this is especially true. You have to, and I find it more of an issue with selling than buying, because it's backwards. So like when you buy, maybe I even have it backwards. I could have this backwards. I'm sorry. Didn't sleep enough. I have a midterm today. But you notice like you got a 3 pip spread when you buy. Right? So you buy, but you're buying higher than you wanted to buy. So that means you're buying the low one. No, you're buying the high one. So the low one needs to take you out. Okay? So you buy higher than you would have liked, and the lower one takes you out. So now when you sell, you're not selling low, you're selling, you're selling lower than you wanted. So the higher one has to take you out. Yes, so I did get that right. Okay? So that's why. All right. Aussie yen. Cool. Just looking at your comments. Okay. All right. Yeah. All right. So this one, what did we have? Okay. Still was lower than all these resistances. Okay. At some point, you have to decide if or when you want to be a bull. So this is really nice for bulls. Are bulls in control? What's sort of the mindset of bulls in the market? Well, this area here, I'll use triangle this time. This area here is where bulls buy on a weekly swing trade. Wait, I grabbed the wrong one. Now I can't grab the silly triangle. Anyways, this whole area is where bulls want to buy. And if they get this right, they're going to the pink zone up top. Now, bears took a shot too, right? You see, this is where bears are supposed to sell. They took a shot, and it's failed. Just like that. Now, probably to do with FOMC and all that kind of stuff, right? That's right, Jimmy. Yeah, Gary, you always have to do that. And again, I find it much more difficult on the sells. So I always put my sell take profits like 3 or 4 pips above the actual price I want to get out because I know I have to cover the spread. Longer, it seems to be easier. Like when you're long, you buy it and you know you've paid 2 or 3 pips higher than the current price. You know it, you can see it. Your trade starts -3, then it's -2, then it's break even, then it's +1, +2, and now you got your spread covered, right? Because it's buying you higher than you would have liked, and so I don't know, it's just easier. But yeah. It's just part of it, man. Just part of it. It's so much easier for you guys now. You know, back when I was your age, the trading platforms are so much better. The fact that you even have charts is amazing, and that you can move stops by dragging them. And you know, you used to have to stare at your charts, look at where you want, and then go back to your trading platform, manually enter in the number, and you could superimpose the number, you could put the decimal in the wrong place, and then the next day find out you lost 90 pips because you didn't type in your stop loss number quite right, and you were 100. It was way 100 pips farther than you thought it was going to be, and all this kind of stuff. You don't make these types of errors like you used to be vulnerable to in the past. So it's those little things. That's just experience, Gary. You got it. Just be lucky that you're not going to make ginormous mistakes by mistyping something. So anyways, step up, guys. Well, we don't really know, but the weekly plan for bulls are here. Bears have failed. That's starting to make me feel pretty good if I'm a bull. And I think you guys know I prefer being a bull in this one. The monthly plan, did we hit the monthly plan? No, and we talked about that being, you know, it was probably going to be frustrating because, once again, there's no clean exit. So it's harder to discern what people are thinking, right? Because we were supposed to go from here to here, and we didn't get that. We looked at, you know, this probably being more likely a bottom, so that's why we have that there. And then even then, you know, we have all these levels of resistance above us. I think it was yesterday or the day before, or I guess now was it Thursday? So on Monday or Tuesday, we would have talked about this being a potential buy for bulls, but you have resistance, 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 resistance. That's why all these are here. So if you bought here, seeing all that resistance and seeing that there's still downward pressure, it's still not ideal. You're still being risky. If anything, if you had to guess, you should continue to guess to be bearish, right? So if you did wait and sell more like up here, you did your job well. That was really good, and you probably felt really good about it. The only thing is we're supposed to be making lower lows and lower highs, not this type of stuff, right? You're not supposed to make a higher low and then a lower high. That just gets you into a different scenario. So the fact that it held up here was pretty good for bulls. But that does not negate the fact that this is resistance, this is resistance, this is resistance, this is resistance. So just because it's an entry doesn't necessarily make it a good entry. But if it's your job, right, like especially my swing traders, yeah, you got to take that and you put your stop, and and if you're wrong, you take the loss, or you don't trade at all. Let it make the higher high, right? So for example, what if it does this now and you just skip it? Let's say you skip this whole week. Okay, and we find ourselves up here tomorrow, so it's a monster day for Aussie yen, and then it comes back. Well, that's cool because We'll have a trade plan next week, right? That's the best thing about trading, especially as a professional. You're like, oh, if I miss this one, nobody will see it in my trading history. Nobody opens up your trading history and says, well, where were you October 18th, 2018? You missed an Aussie yen pullback, right? They don't say that. So you can say, well, if I missed this one, well, at least we busted through all this resistance. I'm going to call this a higher high off of a near bottom, and I'll buy the dip on late Friday afternoon near the New York close, or maybe I'll buy it market open on Sunday, and I'll just catch the next wave. Cool. Just the low-hanging fruit, right? You can spend the rest of the time with your Carmen Electra exercise DVD. That sharp drop. Oh, this one? Well, if you swing trade, your stop should have been down here, below the S. Okay, so yeah. Now, if you jammed it, then your stop should be here, which tells me you were a little bit late on your entry and all that kind of stuff. But yeah, you know what? That happens. But like, here's the thing. Where would that happen, right? As a swing trader, you know this, right? Where would the fall come off of? Yeah, right there. Now, someone would say, well, it went higher than that. Well, that's interpretation. But we know the bulls are going to buy here. We know the bears are going to sell there. So, you know, this is why your stop should go here. Yeah, as they say in Australia, right? At what point do you move it? Well, you know, you might have been up here and you might have said, well, I'm going to move it to break even, okay? And, you know, break even should be, you know, like here. But yeah, so maybe you had it and you got knocked out. You know what? Water off a duck's back, okay? You ever read my book, Luis? I have a 3-second rule. Is it too late? I haven't read from my book in so long. Can I even find it? No, I don't know where a copy of my book would be. Anyways, it's in there. I have a 3-second rule. But isn't this a J-Lo with the new high? What were we on, ASEAN? A J-Lo because of a high. Well, just the high part throws me off, so I don't know. Sorta, yeah, you could call it that. But my whole point is, look, if you were super aggressive and maybe even a bit foolish, you took this opportunity, or at the very least, you took it just simply because it presented itself. And you're like, well, I know it was neither here nor there, but whatever. So that kind of attitude, right? So now you could say, well, now that we're busting through this, now I'm more interested. But you can't buy it here. So what you do is just set up either tomorrow or Monday's trade. And that's how I got to get you guys thinking. That you don't need it now. Like, you're not desperate to make a ginormous amount of pips today, because if you started on that move now, you'd probably lose pips. So you just say, well, I like the fact that we busted through here. It looks like it created a J-Lo. So now that we're up here, I think I'll buy the next dip in anticipation of front running or entering a next week's swing trade that's bullish. That's all. It's totally geared for beginners, Manny. Strategic and tactical Forex trading. So anyways, there's a 3-second rule in there. And if you don't know what a J-Lo is, it's a big, wide bottom. And you may not be old enough to understand what that means, but just Google Jenny on the block. All right. Here we go again on our own. What do you do with this? Cry, I suppose, huh? Do you think this has anything to do with oil falling? So I'm going to have to admit that I must have my support drawn in correctly or not finesse enough. But it's sad where you almost hit your support, you almost hit your pivot, you almost do a lot and it reversed. Too bad, so sad. Look at the macro trade we have going though. So I had it coming up, coming down, coming up, then, then a bit of a correction in here, and then up. Well, the correction was bigger than I thought, and now it's coming up. Now, if you want to measure, take a look at this. Let's update this. There's a top. Let's take it from the bottom, okay? You see how they're the same? So even though, right, so I'm going to anticipate. Now, I feel like I'm going to be wrong in this, but I think the degree of wrongness is not important. It's more of how should you protect yourself? Remember, the number 1 goal in the FX Bootcamp Credo is do whatever it takes to not lose money. So this has nothing to do with making money. This has everything to do with not losing money, right? Because this move is the same as that move, and in particular, and I guess I should reemphasize it, it's the same as that move, which is downward. You should, to protect your money, assume that it's only going to go back to resistance, and you should, even though on a macro level it looks like it's trending up, you shouldn't bet that that's the case. Okay? And what sort of happened here is it's almost been traded like an inverse head and shoulders, and I think that's how I had this other move set up. Remember this bigger move? Right? We basically had it that way. So right now it seems to be down, consolidating, and all that kind of stuff. But when oil goes back up, this will come back down. Okay. Oh, I lost you. It seems the most predominant part of this move that we have going on now is not an uptrend, it's sideways. And even though we were down here and we've busted up, the fact that we didn't make a higher high, and then what we did is we dropped back down to the support and didn't make a lower low, then I'm basically ignoring this low. And I'm saying this, and that, because of that low, I'm taking out this high, and we're just moving sideways in this channel. And for me to really get bullish again, I need a channel break to the upside and a pullback. And even this broke to the downside, pulled back, but didn't even sell. So, for me to be a bull, I'm still going to look for this, and then maybe buy it. But that happened here on the sell side and didn't even give you a new sell. Okay? And remember, because of that, that's why I drew it going back up. And it did go back up. It just hasn't sustained the trend. So it's not a triple top. Remember, a triple top is a reversal pattern. Okay? We got to get our facts straight. It's not a triple top. It's the market is sideways. Okay? You can't reverse something that's not going up or down. Okay? So in this case, you could add an oscillator if you wanted. Okay. When it gets to the top, trade the rollover. When it gets to the bottom, trade the rollover. If you get a rollover and you're not at the top or the bottom, ignore it. Okay. So this is where your analysis says, all right, we have a sideways range-bound market. I need to switch strategies. Okay. For example, you would not use Fibonacci. Let's go to gold. Go to gold! Okay. So what do you want to do, brah? What are you, a bull or a bear? Okay. By the way, swing traders, on the first day of the month, this was price. And if you're a bull, that was a buy. Just saying. Oh, and this was the, you scumbag. And this was the target. Okay? So maybe consider taking the swing trading course. Even if you trade gold, it might be a good idea. So what do you do now? And I'm just sort of done. Don't know, but you may have changed your bias from bullish to bearish, and that's cool. That's cool. So we'll do this then. You want to buy some sort of dip. Okay. So your next plan might look something like that. Okay. Okay, maybe something like that. Your call. Maybe it uses this pivot. It could. It's a little aggressive, but you know, obviously that's an aggressive move, right? It's close. It seems a little high to me, but when you get a game changer, you know, it's not even a 382. So yeah, decision-making time. But one way or the other, you need some sort of retracement. Maybe you've had it. Don't know. Right? Don't know. Maybe a pullback to the 21 was enough. Yeah, could be. Couldn't tell you. Okay? I would like it to fall a little further. You may not get it. Okay? Ronald caught it, huh? Right on. Luis Garcia. Wayne, do you typically use stochastics in a range market? Yeah, that's how you use it. Faux show. Absolutely. And the biggest thing about it, so let me go back to that. What was it? That was this one. Okay, I went through it quick, but let me make the point again. What if you traded crosses? This is how it's taught, right? By the way, has anyone taken a ridiculously, fabulously expensive course and they teach you like sell the high crosses, buy the low crosses type nonsense? No, that used to be a thing. Like you'd spend a whole weekend at a what would be a Holiday Inn, at a Red Roof Inn in Columbus, Ohio. And they teach you how to get filthy, stinking rich using your stochastics. You know, I'd have a question like, and you say the guy at the back, if you're filthy, stinking rich, why are we at a Holiday Inn in Columbus, Ohio? Right? It's the first time I've been here when it smells funny. Anyways, the first thing you look at are not crossovers, brah. Okay. Looks like you guys have stayed out of some bad stuff. That's good. You know, these are old stories I hear or used to hear from traders. So maybe, you know, the market's matured. You You don't get those guys anymore. Good. The first and foremost thing you look for, resistance, support, resistance, support, resistance, right? Right? That's the most important thing. Then you go to this, okay? So we will say that was at resistance, okay? So meaning if it crossed earlier, like here, you would ignore it, okay? What about here? Yeah. So let's mark, let's mark that. Okay. Hey, it crossed down. Do you trade it? No. Right? What's wrong with stochastics? No, it's important. Okay, so this one ignores it. This one takes it. Okay. Next one's at support. Sure, I'd go with that, especially there, right? So, yeah, sure. Okay. This one, not quite the top of the range you were hoping for. This one, yes, yeah, it's pretty close, but not quite. This one is, so that's a sell. Okay. All right, so before people poo-poo on stochastics, let's address it. Because remember, I don't have opinions. I only have facts. I'm a Harvard man, for crying out loud. Too smart for opinions, right? Opinions are like superstitions. Anyways, a stochastic oscillator looks at this candle relative to these candles. Okay? This, right? Or when this is being printed, it's looking at this candle relative to these. And I have them set super tight, so it's really only looking at these I think it's only these candles here, so on and so forth. So what the stochastics is telling you to G forever 80, all it's telling you is higher high. Okay, higher high relative to these, higher high relative to these, higher high. See how they even expand relative to these, higher high relative to these. 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 No higher high. What? No higher high. What? That's all it's doing. And you can see it's getting overbought and it's starting to cross maybe. And it will cross for show if suddenly we make a lower low relative to these. And that's all it does. G forever 80, you don't need that. Of course you don't. But what's your point? You don't need it, but I can whoop your butt with it. But I don't need it either, but it does something, right? So don't bring this, right? Don't bring this stuff in. You're like, oh, you don't need stochastics. You're not a real trader because a real trader wouldn't use stochastics. Be quiet, okay? It's an indicator. It's an algorithm, and it does one thing specifically. Do you need it? No. That's like saying, why do you have paint on your car? All you need is 4 wheels and brakes, accelerator, and a steering wheel. Well, you know what? Yeah, you don't need leather chairs, right? Or you don't need leather seats either. But I got leather seats. I don't need a Tempur-Pedic bed. I have a Tempur-Pedic bed. I don't need it. Okay? I don't need stochastics, you're right. But I can make money with it. So, only if I know what it means. Right? Okay? Jared, I've had my own dealing desk. How about you, bro? Okay. So, guys, an oscillator is simply measuring relative to the previous candles whether they're making highs or lows. Do you need the oscillator? No, you could probably say, I could see this. but there are in situations where this is important. Okay, so for example, a lot of people get caught where they're trying to trade in between, and you're not really at support resistance, and it'll keep you out. So for example, if you come up to resistance, now the oscillator's not going to tell you about resistance, right? You know what I mean? Right? You see what I mean? And then the oscillator is confirming the lower low. So, right, so going back to G forever 80, right, do you need the oscillator? No, because you can see it. You can see that it's no longer making a higher high, and 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 maybe even a higher low cross, or sorry, lower low, right? And then once again, no higher high, and once again, a lower low. So the oscillator drops again, right? So do you need it? No. But in certain situations, it's helpful. Or for certain people, it's helpful because, you know, we see things different, right? We're all a little bit different, right? G forever 80. So do you need it? Oh, absolutely not. And for other people, they prefer RSI. Well, cool, man. RSI is a slightly different algorithm, but it could be very helpful, right? MACD. Again, you don't need MACD. Now, when I use MACD, I change the settings because I don't want it to measure price. I want it to measure market. Do I need that? No, of course I don't need that. So you don't need that, okay? So the reason I get sensitive, and if I'm oversensitive, I apologize, but a lot of people come in and, you know, to the webinar who haven't spent the last 15 years with me, and suddenly they want to take over because they're like, you know, this is all you need, Wayne, and everything else is a scam. What am I going to say to that? Right? Right? You could use this, sure, go ahead, which is fine. And I can do that, but all you have is price action. And then I would say, well, why don't we take it a step further? Why don't you throw in, do I have naked with weekly? I thought I had naked with pivots, don't I? Combo pivot, predictive pivot. I thought I had naked pivots. Oh, yeah. But that is more helpful to me. And that's all I need, right? G forever 80. That's all I need. Right? There's no, right? Well, but there are necessities, right? So if you, instead of you poo-pooing on stochastics, like who the F is using that? Whoa, just and maybe it's just your language, all right? This is my necessity. If you gave me this, I will make money. Okay? That's all I need. But the other things can be helpful too, if you know how to use them. And I'm just trying to teach people how to use them. So I don't always use stochastics anymore, but I use stochastics every single day for about 8 or 9 years. So I know when it works and when it's very useful, and I know when it doesn't work or when it's less useful. And I can teach that to people that might find it helpful. And I think it's really difficult to argue against that. So anyways, anywho, yeah, so if we're up in here and we're in a resistance zone, right, you could trade it south using price action, or you could trade it south with an oscillator, right? Oh, I know. No, we're good, G forever 80. Right? Loo. Yeah, and Jared says, do you actually trade? You know, that strikes me like the wrong attitude too. But yeah, when you trade over $1 billion a month, you might get your own dealing desk too. Let's just say it that way. And of course, that was 10 years ago. All right, so let's move on. .com. Let's over Beast. Let's go to Beast. How does this make you feel? Meh. Okay. Bears got an okay entry here, and we're still at the bullish entry. So if I was a bull, I would be nervous, right? Right? I'd be nervous if I was a bull. Bears, this is a bear swing trade. There we go. And, you know, it's funny. Like, I think a couple of the other currencies, too, were like this, where that's a legit swing trade. There's no doubt. But it's not really... The conditions were not actually they were not good to plan it. Like, this was, even though it was a good trade, it's not really plannable. I can't remember, was it Aussie yen the other way it was? It wasn't really plannable. Like, I don't think I would plan for that. But if I was a bear in the market and I saw the bearish engulfing candle there, I'd have to take it. But it's not really what I wanted or expected, right? Like, that didn't even quite get us to the double top. Like, the plan, let's go back to what we did plan. Our plan for the beast on Monday was buying it here. See, that's a perfect buy. Gorgeous buy. Sunday afternoon, in your face, a buy. Okay? And the plan from then that we did Monday morning together was that it was supposed to go up to here-ish. And I was even stretching this out, you know, the Arctic turtle thing. But really, it's this top that I wanted to play. I wanted it up to the top, and then it was going to correct. So it didn't even get there. Not even forget about the target. It didn't even get to the resistance. So now what? Well, you know, just consider it another level of risk where it's not really the trade you wanted. It's not really the trade you planned. It's not necessarily a trade you would plan. Whoa, 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 whoa. I was trying to get this. Let me adjust over there. Okay. So it's meh. Okay. So my okay. Right. So I don't feel good about that. I'm not. Maybe on the short term you could just scalp it if you wanted, but I look at it and I say, well, out of the entire foreign exchange world, there's got to be something better to do with my money than trade that, right? Well, Louis says looks ranging, but it doesn't even look like a good range because it's not ranging. It's making lower lows, or sorry, it's making lower highs, but not lower lows. So you wouldn't sell here, right? You see what I mean? Like, you wouldn't sell here, you'd sell here, and even that wasn't that great of a sell. And there was a lot of reasons why this could go bullish, sure, at least before a collapse. So it's just not doing really anything at the moment. Now, tomorrow might be down here. Well, that just leaves a new setup for Monday, okay? You see what I mean? Like, if it breaks out, then I will just have a future trade. Well, it hasn't broken out, so I don't have a future trade. Okay. Mark asks, an astute question, significance of buying and selling of certain days of the week at certain times of the month. Well, it's more, I mean, there's different ways to answer that. But for example, if I'm swing trading, I'm entering that trade, let's say the beginning of the week. Because it's a trade I plan on being, it's the trade of the week. Right, Mark? So the trade of the week, if I'm being a cheeky monkey, I could take it on a Friday. Not required. Really what happens is I'm either going to take it Monday or Tuesday. So if I'm a bull, but it sets up high, I got to wait for it to come down low and then buy it a bull. So that's probably Tuesday. Okay. But a trade of the week is likely to happen earlier in the week. And if it's at the end of the week, I'm probably ignoring it, right? That kind of stuff. Then there's sort of other things. Seasonality can change when you trade on a monthly basis. More importantly, I think Fed meetings. Fed meetings change because a lot of times people will hold their trades or adjust their portfolio in anticipation of the Fed meeting, and that can sort of muck up your technical analysis, right? You can think of non-farm payrolls as being an important news event, and that the Monday after non-farm payrolls is Mutual Fund Monday, so that can impact a particular week or when to enter a monthly trade, right? Wednesday has oil inventories, so CAD is likely to move more on a Wednesday than a Tuesday. Not always, but more likely, right? So there's all these things can be important. Or another way of looking at it, Mark, is what do you do if you hit your weekly target in the early part of the week? Well, most people are going to take profit. Well, what if you hit your target, your monthly target, early in the month? Most people are going to take profit. Why? Because you made enough pips in a few days that you expected it would take weeks to make, right? So then you decide to give up, to get out. You got it? You got the Philly Fed? Revisions are bad. Good jobless claims number. Well, that's not a surprise, right? We're at full employment. Okay. So hopefully all that is important, right? And then what I've been talking about lately is we hit our targets. Remember our bullish targets? We hit them like in the 4th or 5th day of the month. And I'm like, done. Remember that, guys? I'm like, done. I don't know if it's going to fall. I just anticipate profit taking. And because it's early in the month, you have permission if you want to counter trend trade, but you don't have to, right? So hopefully you guys remember all of that. And it's not that the most important thing to me in that analysis was I just believe the bulls in that case were done. And that'll set up the rest of the month. And then, of course, once you hit bearish support, then maybe they're done. And what do you do in that case when bulls made money, bears made money, and now you have a week to kill? I'm not sure if anyone's going to trade, right? I'm not sure of anything. So in that case, you back out and you be more conservative, and you start setting up next week's trades or next month's trades and start looking for prices and such. Okay. So Euro didn't move. I don't have to spend much time with that. Here's our trade plan from yesterday. Let me do this on a 15-minute chart. Okay. How'd I do? It looks pretty accurate to me. So now we're just still moving sideways. And here's the thing. I wouldn't sell because that's a higher high relative to that high off of support. But I'm not convinced it's bullish. But if you're a bull and you have to do it, right? If that's your case, you're like, man, I just got to do this. Then you're at your price now. Okay. And of course, your stop would be down here. Okay, and the reason for it is you're considering this support. Let me back out a little bit. You've already identified this long ago support, right? So you come down and you double bottom at support again, but you make the higher high. So now you have permission to think higher low. I have my doubts only because of how long we've been at support. So it's not like we fell, hit support, and are reversing. We're just moving sideways. So once again, this probably only gets us up to resistance. And I already have that marked because that's where we sold yesterday. I'll try to look at that, Alan, but I don't trade that. Okay. Okay. Aussie we've done. ZAR. All right. Well, this has taken a very long time, but we had it going down to this X. And what happened when it hit the X? Bear in mind, we did this 2 solid weeks ago. Actually, I think we had this going up. So I had this actually quite a bit earlier. But yeah, it seems to have sputtered out, right? Not here, not here, not here, not here, right? But it hit the X and then stopped. So maybe a lesson learned. Now, it doesn't mean it can't come down further, but you know, for 2 days it didn't make a lower low. Joe says thanks for pound dollar. Why? What happened on pound dollar? Okay, let's look at the beast. This is the whole rollover idea. It's taking a very long time though, and that's risk to me. When you run out of velocity, okay, when it runs out of velocity, to me it's an increased risk. But I suppose the way to stay strong is just analyze the move and stick with it. Okay, so what this is telling me is probably realistically it falls to here, and then it rises to here, and then it falls to here. Okay, that kind of thing. The best and high use value minus the development cost equals the land value. Oh my God, got midterms coming up. Gotta remember the formula. The 4 types of obsolescence is structural or obsolescence, financial obsolescence, economic obsolescence. You guys should be in college, man. College is great. And some kiwis. La 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 la. So we had it up a week ago. It was supposed to come down to this gray zone and then maybe work its way up. How'd we do? So this goes all the way back to here. Then we set up the inverse head and shoulders. Then we got that. Now we're doing a roll reversal extension. Is it close enough? I can't remember how far back we predicted up and then down, but I think it was like really early in this move before we even got to the top. Alex, he's like, nah, been there, done that. Yeah. It's funny how you can take like simple topics and make them so unbelievably complicated. Right. It gets in the way though. So like my wife and kids are carving pumpkins for Halloween and I'm in the basement studying for midterms. So anyways, up and down to the target and we'll see. That's the first conservative target. That's the more aggressive target. And what did it do it, Marky? 73.50-ish was the entry. It's close, but not quite, huh? 50-ish. So you have to ask yourself, is, can anyone read that? Is 55, is 73.55 considered 73.50-ish? Could be a rabbit, right? Could be a rabbit, could be. Bum, bum, bum. So I think that's all I want to say about that. You know, do I have an Aussie Kiwi chart? I don't even have it anymore. No, I'm sorry, I can't. I don't even use Aussie Kiwi. To me, they're, you know, and you're gonna, especially if you're from Australia or New Zealand, you're gonna say they're kind of the same thing. I would say they're kind of the same thing, and you'd freak out, and you're like, wow, look at the huge difference. But see, I'm not trading them as currencies. I'm trading them as macros. So if I felt like global macroeconomics are positive, I'm gonna look at Aussie and Kiwi as similar exporting type nations, in particular selling stuff to China. So my reasoning would be similar, not that they're same, and you know, not that New Zealand's a bastardized cousin of Australia or something. It's just if I'm buying Aussie or Kiwi, the reasoning behind the interest, or you know, the of buying is going to be related to the exact same macroeconomic reasoning. All right. So and if I did have the Aussie Kiwi, and I thought I might have it on here, if I did have an Aussie Kiwi, it would be to say, which one should I buy first, Aussie or Kiwi? Not that I'm selling Aussie Kiwi or buying Aussie Kiwi. I'm probably buying Aussie and Kiwi, but which one should I buy first? And that's how I use that. Okay. But let's just see. Maybe I got it here. Oh, look, I do have it. All right, fine. All right, so let's just take a look. It didn't start at a good price. You know, here's what we've done. We've done an R1S1 inside month. And now we're dead smack in nomad's land right here. It just doesn't look good to me. And I'm, you know, it's funny because I'm gonna look at this and I'm gonna drink my own Kool-Aid, right? So I just kind of told you I look at this just for short-term relative strength, but I see them in my mind as being sort of the same thing on a macro level. Then I look at this and I'm like, that just confirms what I just said. This hasn't done crap since September, maybe even August. Right? This move, look, and it goes right back to the same price. So if you average this out over 4 months, nothing's happened. So I look at that and like, see, that's why I don't trade it. I might buy Aussie, I might buy Kiwi, I might, right? If I buy Aussie, I'm probably buying Kiwi. If I'm selling Aussie, I'm probably selling Kiwi. Not always, but when they disagree, I just don't even trade it and I move on to something else. Okay, so right or wrong, that is what I do. So anyways, hey, make sure you subscribe. Remember, guys, if you want the chart templates, that's in the description below. Please leave a like. Please leave a comment. If you have a question I didn't get to today, I will read it and I'll try to respond tomorrow in the webinar. What I think I'm going to do is every once in a while, I might do a mini webinar or dedicate part of a webinar going back just answering your questions that you leave in the comment area. So let's try to do more if we can, right? So if you leave comments, I will try to respond to them. I already do now, but maybe we'll even dedicate, you know, let's say Wednesdays we'll do like read the mail type stuff, right? On Wednesdays, we'll go back and I'll review comments that I didn't get to over the week or something. But Stay involved, be part of our community, subscribe, visit Traders Way, open a demo account, all that kind of stuff. Look at FX Bootcamp if you need training. But, you know, we're a team here, so let's work even closer to, if we can. So, peace on earth. May the pips be with you. May your profits be above average. I got to do some real estate development stuff, aka midterms. So I got to bust out and do that. And I will see you mañana. Thanks for being